Hello, this is Trading with Confidence and I'm John Breland. So in my last video, I showed the Wikipedia chart of distance, velocity, acceleration, and jerk, which I call surge. So in this video, I'm going to apply the surge oscillator onto market data so you can see exactly how it moves. So let's get started. So in the last video, I showed you a chart and I showed you the distance, velocity, acceleration, and surge, or they called it jerk. So this time I'm going to show it to you what it looks like on screen. So I'm going to pull up my surge oscillator, and this code actually, you can plot the distance, velocity, acceleration, and surge. I'm going to start with distance because I want to explain or show you exactly what this oscillator is doing. It's important that I instill some confidence in you that what you're seeing is actually what you're getting. So the distance is simply a moving average of the price. So as you can see here, it just simply follows along with price, and like moving averages basically do. So that is pretty straightforward. So now I'm going to plot the velocity. Velocity is backwards derived from the distance in the code. So it all, because all you have really is price action to work with. So I have to do a backwards derivation. I'm going to color this blue. Lighter blue. Okay. So what the velocity curve is showing is basically the speed of the market at any particular time. So to show what I'm talking about, I'm going to pick a spot in the market where it showed a very high velocity value. This is a very high velocity value area. So remember, this is a 5-period moving average of the distance. And as you can see with the price here, this was a very high speed move. If you look back here, it didn't move very fast. It moved pretty fast here, and we got a pretty high reading here too. You can see that here. It's a pretty high reading, but pretty much everywhere else the readings were a lot lower. So it's true what you're seeing is truly the velocity record of the market. And we also have situations where the market goes very fast in the opposite direction. So here's a spot down here where it moved very fast, but in the negative direction. Yeah, it moved down very quickly. And anywhere else around here did it really move down as fast as that? I don't really see much. This is pretty close. This was a very, very fast time. Now let's take a look at an indication where the velocity was 0. So right here, it stayed 0 for quite a while. And you can see that the market was not moving. It was basically flat right here. It wasn't moving up very fast, wasn't moving down very fast. It was just moving sideways. And the velocity had a reading of 0. So that's the velocity. Now I'm going to move over to acceleration. I'm going to move velocity up here. I'm going to switch this to acceleration. So now we have velocity up here and acceleration down here. And to describe acceleration takes a little bit more effort. And the best way I can think of doing it is by looking at a particular trend, like for example, like right here. So as we can see, we had a pretty high velocity right in this area here, moved up. Then we had a shot down, and the velocity had a reading down here. And it moved up a little slower, and with a slower speed here, we got a little bit lower velocity reading here, and then it shot down again. Okay, so the acceleration is going to look different than velocity. So if you look at acceleration, we see that when the market got to this point, the acceleration reading actually was higher than the acceleration reading at this level. So the velocity reading was lower, but the acceleration reading was higher. And the reason for that is because right here, like how much acceleration did it take from going flat to moving? Whereas right here, the question is how much acceleration does it take to both break, which is one kind of acceleration, and to get it moving again. So it took more acceleration in a longer period of time to reach, and it makes sense. It makes perfect sense because you had to both break and accelerate to get to this higher peak. So that's very, very important actually when it comes to trading, and I'll try to explain that right now. So as you can see, then, if we look at this chunk of market action right here, this is basically a pullback in an uptrend. Okay, so the market is moving down. It's making lower lows here, lower highs as well. But remember what I was saying in the previous video, that acceleration always comes before distance. It has to come before distance. And what do you see with acceleration? What you see are higher highs and lower highs. Sorry, higher lows. It is telling you before the actual move happens that we're going to be expecting higher highs next and higher lows. And then at the moment that it tells you that, what comes next? Higher highs, higher lows. So this is what I mean by the principle of this oscillator is the same in the market as it is Newtonian physics when it comes to matter and force on objects in space. Its acceleration must come before actual movement. But like I was saying in the previous video, there's also cycles involved here. So how it manifests is with measurement of these peaks and these troughs here. So this is, this is a revolutionary oscillator, and most people don't know anything about this. So this is why I have this channel. This is one of the major reasons I have this channel. So now I'm going to go into the next level, which is surge. So with the surge oscillator, it's going to look a lot like the acceleration oscillator. You're going to see the highs, the lows, but every once in a while you see a little bit differences, like right here. You see higher highs here, but you see lower highs here. But you get your back divergences I talked about, your front divergences as well here, and essentially the surge oscillator is more sensitive. That's what it really comes down to. For example, there's a spot where the acceleration oscillator had this slope here, but the surge had a very, very steep slope. So it's more sensitive when it came to the back divergences with price. Another case is, this was the top of the market of Bitcoin back in November 21, and the acceleration oscillator did not converge, or did not diverge with price, but the surge did slightly. So at this time, I was actually considering shorting the market but because I'm in the United States, my exchange doesn't support it. So I ended up simply buying my signals and getting out of them quick. That's all I could do at the time, and I profited on the way down, but I had to wait for my signals to come in and take my profits, and wait for my signals to come in and take my profits real quick. So anyway, so the surge is really more of a clearer, more trustable version of the acceleration oscillator, and that's why I like to use it. So there's one thing I also want to say that's very important to understand, and that is that sometimes these oscillators turn when the market is still going up, and that's understandable. You know, in the previous video I was talking about how you press on the accelerator, when the car finally gets to 35 miles an hour, you let the accelerator go and it's just cruising along. Well, this very long trend here is kind of like the car moving to that destination, but you're not accelerating the whole way, because if you were accelerating the whole way, you'd continue your speed. Your speed would go faster and faster. You take off the accelerator. And this is exactly what this is doing. It's saying accelerated up here. Now I'm going fast enough. I don't have to push the pedal as much, and the acceleration goes down. So it's very important to understand that these turns, not just any turn is the right turn. The right turn is the one where you see the divergence, or the divergence combination. So the right turn in this case would be this. You see this divergence here, then you see this divergence here. That's the right turn, because the divergences are there. This is the proper turn to take. It's important to know that you can't simply just take every single turn, because some people think that's how it works, but it's not how it works at all. So that's all I have for this video. In the future, I'll be combining the surge oscillator and the stochastics oscillator to show you how I find signals to trade in the market. And if you got something out of this video, please like and subscribe. Thank you for watching.